According to a series of Freedom of Information requests to HMRC by PensionBee, the total amount of unclaimed pension tax relief by higher and additional rate taxpayers between 2016 and 2020 was an eye-watering £1.3 billion. That's over £1 billion of free cash that was available for pension savers that hasn't been claimed. To be a high rate taxpayer, you need to have taxable income greater than £50,270 in the current 2023-24 tax year. If you're in this bracket, then listen on. When you contribute to a pension, some of the money that would have gone to the government as tax gets added to your pension pot instead. This is called tax relief. This is what makes pension contributions one of the most tax efficient ways to save for retirement. But you need to ensure you're getting the full higher rate relief you're owed. People often mistakenly assume they will receive all their pension tax relief automatically from HMRC. However, whether you need to actively make a claim to receive the full tax relief you're owed will depend on several factors, including your level of income, the type of pension scheme you contribute to, and how you contribute to it. Basic rate taxpayers normally have the correct amount of tax relief added to their pension pots. However, higher rate and additional rate taxpayers are entitled to extra tax relief. Whether you automatically receive this additional higher rate of tax relief on your pension contributions or whether you have to claim back the extra money from HMRC depends on how your pension contributions are made. If you are a member of an occupational money purchase pension scheme, you usually do not have to claim the higher rate tax relief. This is because these types of pension contributions are paid out of your salary before any tax has been deducted, meaning you get the full tax relief immediately. This is normally referred to as the net pay arrangement. Your employer manages this for you as part of the payroll process. However, if you are a member of a group personal pension, a group stakeholder pension, a group SIP, or you contribute to a personal pension, with these types of pensions, the contributions are likely to be made out of after-tax pay. This means higher rate tax relief has to be actively claimed by you. This is normally referred to as the relief at source method of contributing to a pension. If you're unsure if you're in a relief at source pension scheme, it's best to contact your pension scheme administrator to check. In this type of arrangement, your pension provider will automatically claim the basic rate tax relief on your behalf and pay this into your pension for you. This is fine if you're a basic rate taxpayer. However, if you are a higher or an additional rate taxpayer, then you need to reclaim the additional 20 or 25% tax relief that you're entitled to. So, if you are one of these people, how do you go about reclaiming this tax relief? Well, the standard way is when you submit your self-assessment tax return. If you don't already submit an annual tax return, then you will need to start doing this to claim this tax relief. The other option is to call or write to HMRC directly. A common mistake that people make when completing their tax return is to enter the net pension contribution. In other words, the amount you actually pay in, instead of the gross pension contribution, which includes the basic rate tax relief that is automatically claimed by the pension provider on your behalf. It is the gross contribution upon which your higher rate tax relief is calculated that needs to be inputted into your self-assessment tax return. An example might help. So let's say you had made £200 per month personal pension contributions in the tax year. This would equate to £2,400 for the whole year. If you inputted this on your tax return, then the taxman will give you another £480 of higher rate tax relief because £2,400 times 20% higher rate tax relief is £480. But if you enter the correct amount into your tax return, in other words, your net contribution plus the basic rate tax relief already received, you would have actually made £3,000 worth of pension contributions for the year. This is calculated by dividing your net contribution by 0.8 to give you your gross contribution, which in this example is £3,000. the taxman will give you £600 of higher rate tax relief, which is calculated by taking your gross pension contribution of £3,000 and multiplying it by the 20% higher rate tax relief. Make sure not to include your employer pension contributions in your tax return, as they are not eligible for tax relief. If you have not claimed your higher rate tax relief for any reason, then the good news is that you can backdate your claim by up to 4 years. Reclaiming tax relief owed can be done by either correctly completing an annual self-assessment tax return or by calling or writing to HMRC and requesting a higher rate taxpayer relief refund. The higher rate pension relief you're due won't be added to your pension pot. You'll receive this relief in one of 3 ways. Firstly, your tax code could be adjusted. Secondly, a refund via a tax rebate. Or thirdly, a reduction in the tax you already owe to HMRC. Some claims can run into many thousands of pounds, so it is well worth checking whether you're affected by this type of tax relief.